As of today, the stock market is down roughly 7%, and you've got investors falling into two camps. You've got those who have already hit the panic button or considering hitting the panic button, and then you've got those who are considering or thinking that this is a buying opportunity. However, what if I told you that history has provided somewhat of an outline of what we as investors should expect, and it is quite accurate, or could be quite accurate, for what we are experiencing right now? Let's go ahead and break it down. Now, I've perhaps said this before, and maybe it's a phrase that you have heard, but history might not always repeat itself, but it does rhyme. And I think this stat may encapsulate that. Now, I do need to say this part. We know history does not predict the future. Past results don't predict future results, okay? I said it. You know that. We should all know that, okay? But I do think it is important to discuss. I do think it does provide some context, okay? Especially now when the market is volatile and some people aren't necessarily thinking with their logical brains, okay? Here's the thing. Since World War II, we have had 48 corrections. What is a correction? A correction is when you've had a peak in the stock market and it falls 10%. Now, the peak that we've had in the stock market was February 19, 2025. Interesting date. We'll come back to that. But the market fell 10%. We officially hit a correction. But here is the other part to that stat. We've had those 48 corrections. Only, now I want to get this stat right, all right? Only 12 times that correction ended up becoming a bear market, which means it fell 10% and it continued to fall until we hit 20%. That is a bear market. That is something that is quite significant. That was essentially what we had during the COVID crisis in 2020. That was something that was quite significant. If I remember correctly, I think we fell close to 30%, if not more at that point. We also saw that in 2008. That is real bad. Okay, 20% is real bad. That's more difficult to come back from, even though we did come back from that, which is why I'm not as concerned about what we're seeing right now, even though some people call me naive and all this other kind of crazy stuff. I'm like, bruh, we've come back from that. Not only did we not just come back from what we saw in 2020, we came back from what we saw in 2022. We didn't been here, okay? People in comments, we've all come back from much worse, than what we are seeing right now in the stock market, as I mentioned at the very top, is only down 7, okay? Regardless of the why, the math is still the math. We have seen things like this before. That's why I'm not concerned, even though the why behind it may not be something that I enjoy, okay? So in either case, right, only 12 times has it become a bear market, which means that 75% of the time it ain't occurred, okay? Okay, 75% of the time it is either improved or not become a situation that has become, it hasn't expanded, it hasn't exacerbated and gotten it much worse, which gives us some encouragement. Does not give us a guarantee. It gives us some encouragement. It does not give us a guarantee. And perhaps this is a bit early. It is a bit early, but the time I'm doing this recording, and again, the market is volatile. There's a lot going on this week, and it's going to continue to be a lot going on. But as of today, we are no longer in correction territory. The market has already improved 3%. We went from correction down 10, and now we are down 7. So things are already moving in the right direction. Am I here to tell you that the market is already recovering and things are going to be fine? No, I am not. I'm not here to tell you that, okay? But I am here to say that you can see already how a 3% drop can be erased and nobody really talk about it. It is already, quote unquote, air quotes, improved, and it's not really that big a deal, right? And we're already focused on the negative. Or you're either already focused on the negative or we just shift our focus to something else. And that kind of goes back to the negative mindset that we as humans just latch on to try and protect ourselves. And it's kind of how the media narrative worked. We go from everybody focus on the correction because that's what's going to get your eyeballs, is what everybody talks about. We just want to talk about the recession. And as the market slowly improves and goes from correction to, okay, we're down 7%. Okay, we're down 5%. All right, well, everybody talk about Tesla because Tesla is down by God knows how much. And we don't talk about how the market is improving. There is a lot of noise in the investing world, and it can be overwhelming to figure out what to invest in, how to start, and how to be consistent. Because of that friction, that fear, and that frustration, some people decide not to invest at all. And that means that you are not going to be able to grow your wealth. Well, what if there was something, an app perhaps, that can help you to invest and make it easy and to help you be more consistent as an investor? That is where M1 Finance comes in handy. You can choose your investments and set a target, how much you want to invest in each stock, and they will take care of the rest. Or you can choose one of their pre-made investment pies. For example, right now, this is an 80-20 portfolio. This is a good mix for me, and I've added it and I am good to go. You can also get a higher interest rate on your uninvested cash with a high yield cash account. With my link, you can get an extra 0.5% on top of the current rate. Check out M1 Finance with the link right here. All right, back to the video. And let's not talk about that. Let's go talk about inflation, right? And you just kind of move from crisis to crisis, not talking about how things might actually be improving. And again, I'm not here to tell you that the stock market is going to be up this year. I do not know that. Okay, I'm just giving you context. But also, let's talk about the context of the market in general. Because again, the fact that the market did peak on February 19th, just think about that date, February 19th. That is an arbitrary date, is it not? That is just yes, that is the definition of a correction, the most recent peak and being down 10%. I understand that. Yes, there's a correction. It's not good that the market was down 10% at any point. We don't like that. However, if you go back to just the beginning of the year, which makes sense, like year to year, the stock market is down 3%. That's not nearly as bad. Or if you want to, tag this to the president, if you want to do that, which some people do, we can argue whether or not that, should the president have control of the stock market, so on and so forth, or election day, which some people do, if you want to say it that way, then the stock market is down 0.5%. And I'll put a chart up just to verify everything. And the market, again, is moving as time we're doing this. But from election day, the day we all voted and all that kind of stuff, is down like 0.5% to today. It's actually not that bad from election day to now, and from the beginning of the year to now, down 3%. Down is down, okay? So it's not great, but it is worse from that peak to now. So, it's just an arbitrary date, and it's not something that I would harp on and focus on and make the worst part of my day. Now, I'm not here to massage the situation and make it better. It is still a loss, okay? The market is down, and what we are seeing is not good, okay? The red that you are seeing in your portfolio is a real thing. However, what it is not showing you is the long term, and what you may not be focusing on is the long term. I think that is the thing. What we are doing and what the media is doing and what we may be doing emotionally is hyper zooming in, because that is just a month. When you think about it, it is March 20th, and we're talking about, February 19th, so basically a month, hyper focusing on 1 month's loss. 1 month's loss, which is bad, okay? I don't want to gloss over that. 1 month's loss, which is very, very bad, versus what happened over the last 6 months, what happened over the last what happened over the last year, and looking at that in context, which may not be as bad. Or, like we always talk about, what about the long game? How much have we made over the last 5 years, 10 years, so on and so forth? Or those who have talked about in the comments, how much have we made and how much have we learned since COVID over the last 5 years? That is how investing works, because that is how you work. That's how you work towards retirement, towards building wealth, so on and so forth. That is where we should actually be. And now you know how drawing everything into a single moment, into a single month, can actually hurt you and distort how everything feels. Because when I started to do research for this video and pull together these stats, I actually pulled back and said, well, wait a minute. Is it actually just less than 1% that the market is down since election day? I had to double check, and I thought I was wrong. I thought the charts were wrong, and then realized I thought the correction was from election day to now, which I thought that made sense until I actually had to do the math and realize like, no, that actually was not the case. The peak of the stock market was just a month ago. And what we have all done because of all the headlines, because of all the chaos, is just hyper focus on just the last month. That is the danger. That is the danger of being so plugged in to all of this stuff and tuning too much into the noise. That is why you have to tune out of the noise, and that's why you want to zoom out and focus on the long term. All the basics that we have been talking about. Now, with all of that stuff out the way, is that going to change what is going to happen from here all the way to December and here all the way through next March? I don't know. Okay, I do not know. But what I am going to tell you is the same thing I told you 5 years ago. You should still continue to focus on the long term. The market still has time to recover the same way it has had time to recover over the last, week or so, as it has bounced back, I'm putting that in air quotes, from -10 to -7. We'll see. I will also say that these companies can adjust. Whether we like to adjust as consumers, whether they like to adjust as companies, that is possible. And as consumers vote with their dollars and how they behave, these CEOs will respond in one way or another, and things are going to move. And Elon Musk, as he is losing wealth and as consumers are responding, those board of directors are going to start to change things, and he might have to respond as well. So we'll see. We'll see. It is a long year. It is a long investing journey. And over time, usually investors do win. And the fact that history has shown this as well, we'll see if it repeats itself. But again, the fact that history has shown us that, again, 75% of the time, that this bad situation that we're seeing right now doesn't have to end in a bear market is something to pay attention to. If you want to learn more about the stock market and how we should behave as investors in times like this, you want to check out this video right here.